Hey guys, this is Joe from Startuprad.io. Are you self-employed or running a small business? With Tide's free business account, you can manage invoices, track expenses, and prep for taxes, all in one place. Plus, get 200 or 400 euros cash back, depending on your business type, when you sign up and spend. Use promo code Startupradio at tide.co/podcasts.de. Terms apply.
Welcome to Startuprad.io, your podcast and YouTube blog covering the German startup scene with news, interviews, and live events.
Hello and welcome everybody. This is Joe from Startuprad.io, bringing you another episode from the German-speaking entrepreneurship scene. Today I would like to welcome Wolfgang here with me. Hey Wolfgang, how you doing?
Hi, lovely to be at this podcast.
Totally my pleasure. Before we dive into startups and investment philosophy, let's zoom out. DACH is becoming one of Europe's strongest engines for green tech innovation, and Hi Inov's Green Tech Mapping 2025 gives us an inside look at what's coming next. So Wolfgang, let's get into the data, the deals, and the future. Maybe before we do that, could you tell us just a tiny bit about who you are and what you do, and what Hi Inov is before we get into what you really did with the green techs there?
Absolutely. So we are a German-French B2B venture fund. We mainly focus on Series A investments. We are on the market now for more than 10 years, just investing our third generation. We specialize on deep tech and true B2B technology. So everything which helps enterprises to become more digital, become more efficient. This is our investment themes. Basically, we invest in 5 main areas. One, obviously, we are going to talk about that, is green tech. We do what we call compliance, so leveraging all the European regulation and what kind of interesting business models coming out of that. We traditionally, as a team, we have a deep expertise in everything which is data, big data. You know, obviously now with AI, things are moving quite quickly and really shaping the industry. We do cyber. Also a little bit with a defense angle, and then we do something what we call new work. New work is basically, technologies who reshape the workspace, like, remote working, collaborative tools, but also HR developments, because our thesis is that people, they just, are looking for a sense in work, probably a little bit different than 20 or 30 or 40 years ago. And so a lot of companies are also focusing on education and on other HR related topics. So these are our 5 main investment themes.
Mm-hmm. I was wondering, when I first read the pitch for the content, I was wondering, what inspired you to do this green tech software mapping. I assume it was not that you were bored and you didn't have already more than enough work. How did you get started? What was the trigger to do this green tech mapping?
Well, actually, this is not the first green tech mapping we are doing. We did it 2 years ago, in 2023 as well. At that time, it wasn't green tech. It was more called DACH climate tech mapping, which kind of evolved. I think for us, it's very important to understand the industries we would like to invest and to understand the broader context, to understand the players, to understand the ecosystem. And we do that for all of our 5 investment areas. So green tech obviously is very important to us. And therefore we just would like to have a good view on the market. And to be very frank, it's also kind of a marketing tool. Because we really want to tell the market, hey, we are there. We are interested in that space, and we think there's a lot of interesting investments to do in this space.
Mm-hmm. I assume we will link down here in the show notes to the green tech software mapping. Just having it here on the other screen. One of the big areas is carbon footprint monitoring, we have energy transition tools, we have circular economy, raw materials optimization, and corpo initiatives. Given that, and that it already had a different name in the past, can you tell us from your perspective what were the three most surprising findings you had in 2025 versus 2023?
Well, I think, and I really looked it up in 23 and looked what really has changed. Obviously, is this a surprise? Probably it's not a surprise. The map got richer. Many more logos on the map. The ecosystem is really evolving quite a bit. But what's also interesting, there's a reason why we did green tech software mapping, and at the time we called it climate tech mapping. I think it also becomes clearer and clearer what are really the trends and the investment topics software investors could be interested in. When I basically, 2 years ago, we had 9 sectors, and they were called recycling, reporting, deep tech, digital twin, battery. So it basically was more like a mapping around specific solutions, specific technologies. But I think now, the more the ecosystem evolving, it is clear that it's not so much about specific technologies. It's more about there's different areas, people trying to find solutions, whether it's with technology, whether it's with, other business models. And so I think the surprising or kind of the new methodology is more looking at it from a user perspective rather from a technology perspective, because we see real usage of these technologies.
Talking about the real usage, we already talked about the different categories here. Which of those categories do you believe is gaining the fastest traction in the DACH area?
Actually, that's kind of a tricky question, because I think, and we even have real life example, and maybe later, on a few examples, I can elaborate on these real life examples. I think it all is kind of interwoven and kind of linked together. Talking about carbon measurement, you would think it's very easy and very, very trivial to measure the carbon footprint. It's not. Just ask AWS and ask, what's basically the carbon footprint of your data center. They don't know. They simply don't know. So when you don't have kind of the tools to measure impact, how, can you achieve corporate sustainability? How can you really kind of achieve energy transition and circular economy? So I think what's happening right now is, there's a underlying layer of measurements of technologies developed, then obviously, and then on top of that, once they really understand the problem, new technologies emerge to solve these problems. So I wouldn't really make a bet, what of these 4 areas are growing the fastest. Put it like this. When you look at market volume, obviously energy transition is a huge market. It's a multi-billion euro market, and it's huge investment volume. When it comes about carbon measurement, these are kind of software, which are used. But so when you look at I wouldn't call that as big as a market as carbon, as energy transition. So I think when it comes to volume, obviously there's a difference, but what's going to be most active and picking up, hard to say.
Mm-hmm. Mm-hmm. I see. I was wondering for our audience, if you're building green tech startup in the DACH region or want to invest in one, drop your thoughts in the comment. What trends do you believe will dominate by 2026? Going a little bit into trends and technologies. What role is generative AI already play in green tech software, and how do you see it evolving?
I think that's a broader question, because AI is just changing the way how to develop, how to propose, and how to, software, how to propose software, how to structure software, and how to go to market. That's a general trend. There's an entire layer of engineers, of software engineers and programmers, which aren't used, aren't necessary anymore. With AI, you can create wow effects to customers, even to investors. And when you really go under the cover, you understand, well, it's basically a very smart application of an AI technology, of an AI LLM model in order to come up with answers, which are probably very nice to have, but probably not very, kind of sustainable when it comes to a clear differentiator. So I think the market, especially when it comes to software investment, is changing dramatically right now. And obviously that impacts green tech software because, it's so much easier on the one side to visualize, to get answers, to gather data, to really try to make sense out of what you're gathering, what you're trying to achieve. But on the other side, it's also a little bit tricky because you really have to think very hard, what is really the value add you're offering to customers, to the landscape, which goes beyond AI, because AI at the end of the day, I think it's more a tool. It's not the solution per se. So I think it's getting a little bit more complex when you think, what's really the value proposition you want to invest. And that's true for green tech, as well as for a lot of other, kind of sectors.
Mm-hmm. Mm-hmm. I have been observing this space for quite some time. And for example, what was one of the things that happened in the past was, for example, cloud took over, and at one moment, everybody was a cloud first startup. I do believe that's now so essential. Nobody talks about that anymore. All startups are more or less cloud based. Do you think it will be the same way with AI, that almost every startup in one way or another, especially software, will include AI?
Absolutely. I think it's always like, obviously now when you have a pitch, when you get business plans, the headline is always AI. It seems like, nobody even dares to ask for money or really build a business model if AI isn't in the headline. But at the end of the day, it's a technology. It's basically a technology which makes a lot of things easier, faster, which basically creates new opportunity. But at the end of the day, it's a tool, and it will become a standard. It will become a standard, in developing software. It will be a standard when you request information, when you create a user interface, a look and feel interface. And I'm pretty sure that in 2 or 3 years, the pitches won't have AI in the headline, but it will be deeply interwoven into any solutions startups offer.
Mm-hmm. Talking about solutions here, you're also tracking startups using vertical software tools like, it's called DeepKey or DeepKey to meet ESG and CSRD requirements more effectively than horizontal platforms.
Well, I think that's just, how it is. I think if you really want to be successful, you have to be an expert in the domain you're doing, especially when it comes to data plays. And by the way, that's also the big opportunity startups have, compared to all these horizontal players, the big Silicon Valley giants and the guys who develop the LLMs, really having a specific industry expertise and really understanding the data sets and data requirements of that specific industry. In the case of DeepKey, that's really an investment we are very proud of, because, we don't call it startup anymore. It's a real scale up. They are now the European-wide leader when it comes to measuring the carbon footprint in the building industry and or the management of buildings. And that requires not only the ability to know how to measure a carbon footprint, how to display, how to organize it, but it also requires an in-depth knowledge of the industry. And typically horizontal platforms simply don't do that because that's not what they are built for. They are general purpose platforms, and people probably would use it as a tool to build their own solution, but they really don't address a very, very specific industry. Actually, I've rarely seen that. So there is a premium for industry knowledge, sector knowledge, and you can build true market leaders when you have that knowledge.
So your mapping is not only graphics, it's also a document. And when I went through it, you mentioned 216,000 tons of CO2 savings impact. How did you calculate that, and what does it signal about the market maturity?
Well, I have to say, when I read that, I was asking the question to myself, and then I really asked also my team. It's what DeepKey basically has on its website. So they track it very closely. They are together with another company we have in our portfolio platform, SH, one of our B Corp companies, and they are a first mover, obviously because it's their solution to really track and to really kind of find a way how to measure carbon reductions. They have created a tool around that, and now obviously they publicly communicate about it. I think it's quite massive, and I think it's also a trusted number. Often, as said, ask AWS what's their carbon footprint. How much a gigabyte of data request really admits in carbon, in CO2. It's pretty hard and pretty tough for them to say. At least at DeepKey, that was a focus early on.
Mm-hmm. Mm-hmm. Let's talk a little bit about the DACH specific context. Usually when you look into something like that, you see strength and weaknesses in the DACH startup ecosystem. Where do you see that, especially when it comes to scaling innovations?
I think what's specific, and obviously I can compare a little bit because we are equally investing in Germany and in France. I think in Germany there's kind of this first mover mindset, and people have always embraced that very early on. For example, when I compare the DACH mapping in 2023 to the French mapping, I think I see a little bit more logos on the DACH side, just a pure number game. So I think it's this mindset and really, wanting to change something and really building technology solutions around that. So that's a very positive thing. Obviously it's all across Europe. But somehow I have a feeling there's this special touch, to the DACH market when it comes to this thing. In terms of scaling climate innovation, and I think we are also going to talk about that a little bit further down the road. It's at the end of the day, it's great to reduce carbon footprint. It's great, to create a circular economy. It's great, that corporates get, more responsible and take care. A few things probably they haven't done like 50 years ago. But at the end of the day, it really is, after all, it's business, right? It's how to make money. And I think that's the biggest challenge, and probably even in Germany, like people tend to think about the solution per se, rather than is it really something which is sustainable, but not sustainable in terms of ecology, but economy. Because at the end of the day, all this all the solutions have to make money, have to create a return. Otherwise, it's not sustainable. It's simply a lie to think that you can do stuff, just for doing stuff. It needs to be economically viable. And I think that's the biggest challenge.
Mm-hmm. Talked about challenges here. There's always regulation. Do you see the regulation currently as an opportunity or as a burden to green tech founders?
I think that's neutral. That really is neutral. I think regulation is grossly overrated when it comes to these things. Obviously it can initiate thinking. Maybe there can be a little bit of a wave and create opportunities. But at the end of the day, I'm a deep believer that people should act freely, and any regulation is a overlay. And when the overlay really, just creates additional cost and complexity, that's probably not a good thing. So I would say it's neutral. There for certain companies that probably creates opportunities, but at the end of the day, well, we all know it. We do have a bureaucracy problem, and that doesn't stop in green tech.
Yes, nicely said. When you did the specific mapping, I was wondering within the DACH region, when I was thinking this through, I didn't have a specific hub in mind, something like Berlin, Munich, or Zurich. Do you see any of them or another one seen emerging as a green tech leader in software innovation?
No. I think that's the nice thing about Germany. I'm investing in Germany now for 20 years. Good startups are all over the place. Obviously, there are clusters. There's a Munich cluster, there's a Berlin cluster, there's a Zurich cluster. Maybe there's kind of a Cologne cluster as well. But you can find great companies, even like in small places. It's pretty. What I put it like this, having a little bit also in Switzerland at a few conferences where they present solutions, it seems like Swiss people, they really do a lot when it comes to hardware related solutions. Munich is an engineering spot. We all know it, it has a great infrastructure, and a big kind of non-software plays are played out in Munich as well. Berlin, it's clearly software centric, but is there a specific hub? Really never happened. I'm also, when I look at my personal, local investment, it's completely random. Great teams are all over the place, which, by the way, is the beauty about the DACH region. Ask the French. The French. It's pretty clear.
A lot concentrated in Paris. We'll be back after a short ad break with investment strategies and portfolio insights. Quick break brought to you by Tide. If you're self-employed or running a small business, you know how messy finances can get. That's where Tide comes in. Their free business account helps you to stay on top of it all. Invoicing, expenses, and even smart tax tools streamlined in one place. And here's the best part. Get 200 euros cash back when you spend 500 euros as a sole trader, or 400 euros cash back after spending 1,000 euros as a registered business. Just sign up at tide.co/podcastce and enter the promo code Startuprad.io at checkout. Hey guys, welcome back to my interview with Wolfgang from Hi Inov on the green tech DACH software mapping. We get exclusive insights from him, and we're now talking about investment strategy and portfolio insights. Wolfgang, how does the green tech mapping inform your deal flow and investment priorities at Hi Inov?
Well, that's also a very generic question, which probably isn't 100% on green tech mapping, but it's basically, it shapes your way of thinking. It's always different to discuss or kind of to think you've understood something and to really bring it on paper. This is, by the way, also why, like, when we do investments, people, submit investment proposals in written form, like really plain English, not kind of paste and copy of some PowerPoint slides, because the very moment you really have to bring down something written, you have to think. And by the way, best example is that green tech mapping, which was called climate tech mapping, 2 years ago. Now really we had to think, how the market is evolving. Are there new categories? Do we have new classifications? So that it really is, it's an exercise which kind of disciplines you and really makes you look, very carefully in what you're really looking for, what are really kind of the major trends, and what really makes a difference, or what possibly could do a difference. And then obviously it's a great tool, because then you have a very concentrated period in really getting it right. Not forgetting pieces, trying to have a full coverage. Probably, obviously, on our mapping, there isn't any, 100% of possible green tech companies in the DACH region, but at least, it kind of disciplines you what's really important, what could be potential winners, or what are kind of people, our companies who are really setting trends. So I think it's very useful, especially when you work in a team and when you want to start a conversation, and then when you want to basically discuss business plans and really also, what kind of direction you should look at. We really like it. And as said, to be very frank, I pointed that out at the beginning of that podcast. It's also, making us known a little bit more in the market. And, just a little bit, a little exclamation mark. Hey, we are there and we are interested in this space.
I see. Talk about investments. Can you walk us through the decision to invest in Trace for Good and how it aligns with your thesis?
That comes a little bit back to what we were discussing previously. What do you think about horizontal solutions versus verticalized solutions? We deeply believe that, when you want to do a startup, going horizontal is tricky. You don't have the means, obviously, and then you're competing against the big guys. So you really have to choose your vertical. But we also believe there will be always a leader in a specific vertical. And, we've seen that with DeepKey. We've seen that, with a few others of our investments, where basically really companies have chosen a vertical, became very good in it, and then become the market leader. And in the case of Trace for Good, obviously, just to give a very brief explanation, what they do, basically they track the supply chain in the textile industry. So basically, when you want to buy a t-shirt, you probably want to know, from the very beginning, what happened, from the raw materials, where it was done, etc., etc. It's a little bit, it is a supply chain issue. And supply chain is a big issue, obviously now, a little bit watered down with the latest twists in the US. But I think at the end of the day, that's a key question to be answered, and being good, in a very specific niche and a very good vertical. This is a key thing. And then for us, it's a very early investment. We thought it's a great team, 2 young ladies who have a lot of experience in the space. Obviously it's a French company, so textile, fashion, that's probably a French thing as well. So I think they are also very good positioned when it comes to that.
How do you assess impact and commercial viability simultaneously when you're evaluating those green tech software startups?
We don't. We only evaluate commercial viability. To be crystal clear, and that's maybe also a misunderstanding, we don't do impact because we want to do impact. we think impact is a great way of making money. And that's, what we are for, because obviously, we manage the funds of our investors, and we really want to make sure that they get a nice return. We think impact is a trend theme. I think there are a lot of good opportunities to make money, but when we look at a company, it really must be ROI driven. It really must be part of a value chain. It really must solve a true economic problem. And, if that economic problem also solves an impact problem, even better. I just give an example. I did an investment just a couple of weeks ago in a Germany-based company south of Frankfurt called Xelera. With a little bit in a twinkle in an eye, I say they are an NVIDIA competitor, but actually they really are. Basically what they do kind of a compiler for a chip, for an FPGA chip. FPGA chips are programmable chips, which help basically to dramatically increase the capacity of data centers. So basically, since there's so much traffic now hitting data centers, with all this AI traffic, data centers are desperately looking for solutions, how to mitigate this traffic, offload traffic, still keep security. And Xelera is helping data centers doing that. So it's a really ROI case, because basically, data center traffic consumption goes down by 50-60% by using that technology. But in addition, obviously, when traffic for the same, traffic hitting a data center goes down by 50%, the CPU usage, you're suddenly saving 50-60% of energy, in a data center. So it has a huge impact as well. So would I call Xelera an impact investment? Probably not. It's more like a semiconductor investment, but it has a huge impact. It has a clear ROI case. And this is why we also call it an impact investment.
I see. For our audience, I would be wondering, what do you think, guys, which matters more when investing in green tech? Measurable CO2 impact or scalable business models? Let us know how you decide. It's a hot debate. You are obviously an investor, and I do hope you do have some advice for founders. What's the mistake you see most often, not necessarily only in green tech founders, but pitches you get, and how do you fix them? Is it that they spray and pray and send their pitch deck everywhere, and it's not necessarily a fit with most of the investors?
Okay, so just maybe go first green tech and then a little bit more general. So, but then, this green tech comment is already a general comment. Don't think that a product or a solution, is fixing anything. It simply doesn't. It's also don't think that, that you have developed something which solves a solution which really doesn't exist, because that shockingly often is the case. People, basically have kind of this theoretical idea that something needs to be solved, and then they develop a product or kind of a solution around it. And then in reality, nobody needs it, because it simply is only a theoretical problem, not a real life problem. So I think, obviously the key thing is when it really comes to kind of starting your startup, or really get industry expertise and really try to solve a problem which exists and which creates ROI, which really, at least in B2B investing, which really, as simple as that, you put out a piece of paper, you can go to a customer and you say, look, when you take my product, when you take my solution, you can save X in cost, or you can get, so much more nimble, or you can gain so much more customers. And that really requires an in-depth knowledge of an industry and the workflows within that industry. And I think that's just my advice, to a green tech founder, but also to any technology founder. First of all, try to sort that out. And then when it comes to pitching, I think that's a classical thing. You can do spray and pray, but what are the chances that you are the one who's picked out of that inbox, deal flow we are getting every day? I think carefully think, what could be a good investor for you. And when you've identified people you think are good fits, try to find people who know them and try to get a personal introduction of some sort. I think we've never not taken a call with a company when we got a personal introduction, unless it would be completely out of our scope. So I think that's a golden rule. Don't rely on, well, obviously you have to do your test scope report. You really have to be knowledgeable about the market. But the next step is really, even in the world of AI, technology, Zoom and everything, try to get the first personal contact, the first personal touch, and that takes you very long.
Interestingly, you talked about Celera. Something rang in the back of my mind. I interviewed them 5 years ago. Almost exactly to the day. That's pretty interesting. You talked about you're mostly around Series A. Rule of thumb is 100 million revenue. A few months ago, I talked to an investor and I asked him, you're looking for startups like $1 million US or €1 million revenue. And he said, if I get the chance, I always take the euros. At this stage, they're getting really serious with their startup. What traction metrics or early points of proof are most persuasive to you when you evaluate such a company?
Okay, just to be clear, a Series A is not 100 million; it's a million. 1 million in revenue. And is it a random number? Yes and no. Could it be 800? Or does it need to be 2 or 3 million? Probably. I think I think venture capital is about the willingness of taking 4 risks. There's a team risk, there's a product risk, there's a market risk, and there's a scaling risk, right? And as a Series A investor, you probably want to take 1 risk, which is a scaling risk. And all the other 3 risks should have been more or less validated. Obviously the team, you don't know. Obviously there are a few things where you can, other than obviously the personal interaction with the team, which is super important. There are a few things you can get an idea whether it's a really good team. For example, it's the simplest stuff, cap tables. Like people who are already 70% diluted in the seed investment are probably not great guys, because they kind of didn't understand a seed round. And then obviously, when you've spent already 5 million to getting to your first 100,000 in revenue, that's probably not a stellar performance. So you get that. Okay, but then the team is very important. And then obviously, market and product goes a little bit along. When you have a critical mass of customers, there probably is a market because people are buying. And, when people are buying and aren't churning, then you probably have a product, because it's working and people seem to be happy. So, and I think as a Series A investor, you want to have these 3 things validated. And that can be also depends on the product. That can be, maybe you have a company who does a product which really instantly gets huge contracts, and then you have a couple of big brands using that, and then it's already a Series A, and then you have probably kind of a more a small ticket B2B play, which even resembles to a certain extent to a B2C play. And then you want to have 1,000 customers. You want to have 2 years of solid KPIs, and you really want to see the growth curve. So I think it's where where kind of you position yourself. And then, so that's a Series A. To me, that's a Series A. And when it comes to pre-Series A, I think, out of the three risks, probably one of the risks isn't really sorted out 100%. So you're willing to say, well, the guys, probably they have a product, they have a few customers, they've kind of done a good job in product development, but you clearly sense they really haven't found their go-to-market yet. Probably they have to do a little few twists. 80% seems to be okay, but they have still, like they need a year or 18 months to really go very solidly, where it really then is kind of makes sense to put in 4, 5, 6 or 7 or 8 or 10 million and really deploy it for scaling the company. I think that's the difference between kind of a extremely early pre-Series A, and kind of a solid Series A where you really want to deploy money for getting. By the way, also very important, what's the difference between a Series A and a Series B? I think a Series A should take you with the money you raise, from a CEO-led sales model to kind of a broader scalable model. So basically it's a transition, from transitioning from a founders-led team to a team which is mainly driven by the second layer, where you have hired a VP sales, where you probably hired a VP product, and everything isn't relying on founders anymore.
That's a pretty nice definition. I was also wondering, because the space we're talking about right now is pretty full of buzzwords like sustainability. How can founders there stand out with some substance? Because I do believe you do get a hell lot of buzzwords on these pitch decks.
Yeah. And probably it's also that I'm a little bit long in the market, don't care. As I said, our ROI counts. Understand the workflow, understand the industry you're working in. Are you really solving a problem? Are you going to make money? Forget about the buzzwords. And by the way, I think sustainable is a great word. It's a great word. You are sustainable when you're probably going to be around in 10 years from now. I've never seen a money-losing company being around in 10 years. I don't know. Do you?
I have to smile here in the background because before we started, I told you I'm now in the 11th year here with Startup Radio, officially sustainable. Let's talk a little bit about future trends and strategic foresight. The role of the DACH-based green tech. What will they play in Europe towards a broader push for net zero emissions?
I think they will play a 20 to 30% role. The German market in Europe is 20 to 30%. And, at least when it comes to startups, you have France, you have a little bit of other areas. So, it's probably 30%. I think there will be a few leaders. There will be some groundbreaking technologies coming up. But it's a European ecosystem, even so we invest pretty nationally. And I think the contribution will be, it's a percentage game. It's a numbers game. It will be 20 to 30%. That's my personal guess.
Personal guess is also totally fine here. I do understand a lot of what VC's doing is gut feeling, and it's always good when you get a little bit of this gut feeling here teased out. Do you foresee the green tech software becoming a default layer across all industries, similar to something like how cloud computing has evolved?
No.
Nope.
No, definitely not. Because a default layer means you're really part of the value chain. And being kind of, and really becoming part of the production value chain of a specific solution. So, obviously will green tech be very important for running businesses? Yes, absolutely. Yes, because you have reporting requirements. You basically also want to become more competitive to a certain extent. It really also probably helps you reducing cost in any sort, especially when it comes to carbon pricing, etc., etc. But being a default layer, so kind of being absolutely required to run a business. Well, maybe I have too little of an imagination, but for the moment being, no, everything which I'm seeing, even on that mapping, wouldn't let me that it's going to be a default layer like a cloud infrastructure. That's not going to happen. Maybe in 5 to 10 years, I don't know. But from what I see now, I'd be skeptical.
The EU is always pretty forward in regulations, taxations. What impact do you see on this EU level carbon taxes or green subsidies they could have on startup formation and funding?
I'll tell you, subsidies, always bad, really bad. I think there are far too much subsidies already in the market, which are completely distorting the market. A lot of stuff is going to subsidized, which doesn't make sense, which doesn't have a sustainable value proposition. I really am a big fan in carbon taxes. It's probably the most elegant and most comprehensive solution, to solve problems, because it really gives a price to something which hasn't had a price. And the very moment something has a price, you can do marginal trade-offs. And I think that's a wonderful thing. And, hopefully, will it ever work? Let's see over the next 10 years, but at least from a concept, that's brilliant. Because, the very moment you give, you oblige people to think in margin gains, technology really gets rolling. First, low-hanging fruits are fixed, and then, the more the price increases, more tough problems get solved, and then also it's kind of, to a certain extent, you can plan with it. Probably you can't really plan for the exact price, but you can plan with a long-term trend, and that's always a very good thing when you can plan.
Mm-hmm. That's totally true. Talk about long term. Let's talk about your positioning as a VC, Hi Inov. You've raised Fund 3 and you have a partnership with Anka Ventures. How will this amplify your ability to support the green tech innovations in the DACH region?
Just a very brief comment on Anka Ventures. Anka Ventures, we know them very, very long. Actually, they used to work with us they were part of our team, at least most of them, within Anka Venture. It's a little investment boutique who is specialized in impact investing, but also in seed investments. And basically, they really help us to source deals and to even kind of structure deals in the seed phase. We see them kind of as a feeder. It's kind of a feeder initiative for us. About 10% of our fund we'll deploy in kind of seed opportunities in partnership with Anka Venture, just to have a foot into great teams and great performing seed startups at a very early stage. Also what they bring on the table, like when they founded, they had this vision early on. So, and at least in France, but now also starting in Germany, they do have a name in impact investing, early stage seed impact investment. They do have quite some knowledge, and it's always great, to have knowledge in the team.
I see. If you had to bet one under the radar green tech sub-sector right now, what would it be and why?
It's infrastructure. Nobody really talks about infrastructure. It's about telecommunication, well, especially when it comes to software. I remember all these ideas when it came to B2C commerce, when it came to B2B, all these ideas have been out for 30 years. I remember in the 90s, like being in the Silicon Valley, we talked about e-commerce, we talked about SaaS. Obviously, it wouldn't be called like that, but there simply was the underlying infrastructure missing. And I think now, especially when it comes to software, when it comes to AI, but when it also comes to kind of green tech solution, which basically requires the analysis of huge amounts of data, you need to have the underlying infrastructure, and people really need to go into this direction. This is also a reason why we did our investment in Xelera, where we are looking in other sectors. I think the sad news, one more time, is when it comes to infrastructure. It's mainly a Silicon Valley, Israel play, but there are always a few hidden gems in Europe as well, and we are actively looking.
Mm-hmm. I see. Wolfgang, thank you very much for your time. We will link down here in the show notes your LinkedIn profile. You obviously have a lot of contacts. Before this interview, I realized that we have more than 120 contacts in common, but it needed an international PR agency to get us in touch. By the way, they did a good work. And, secondly, we will be providing a link to the company website so you can do some digging, some research. And of course, there's a place where you can pitch as well, and you'll be back for our premium subscribers for a few more Q&As. Thank you very much.
Perfect. Thank you very much. Great interview.
Thank you.
That's all, folks. Find more news, streams, events, and interviews at www.startuprad.io. Remember, sharing is caring.
Ready to level up your business finances? Open a free business account with Tide and get up to 400 euros cash back after qualifying spend. Go to tide.co/podcasts.de and sign up using promo code Startup Radio. Don't wait. Start saving time and money today.